Welcome back to the Longacres Finance channel. Today we will be taking a look at the magical dividend snowball for United Healthcare. I very much enjoy looking at this type of analysis, and I hope you do as well. It can be a great motivational tool for dividend investors to see the true magic of long-term passive investing in quality dividend companies. The reality is that on a daily basis, dividend growth investing moves very slow. Even a year of dividend investing doesn't truly display the power of reinvesting dividend income. I recently shared the results of my personal quality dividend stock portfolio on my channel, which now has a little bit over 1 year worth of history. The portfolio is still rather small, but signs of the dividend snowball gaining steam are already evident. You can use the link at the top to check out that video. Today, let's travel back in time to 1985 and pretend we are once more presented with the opportunity to invest in United Healthcare stock during its early years. I love the concept of turning small sums of money into great wealth. So let's see how investing $20 per month into United Healthcare plays out. The initial $20 investment in January of 1985 would result in about 102 shares of UNH stock today. The stock trades for somewhere around $464 today, which means that first $20 investment is worth about $47,000 and some change today. Wow, I mean that is an incredible amount of growth during the last almost 37 years. To show you just how amazing this growth rate has been, it would have taken about $431 invested in 1985 to give you a $1 million valuation today. Not a bad multiple of your money if you ask me. Let's go back to the original $20 investment, and let's assume that you continue to invest $20 into UNH stock every month between 1985 and today. How much do you think this investment would be worth today? Well, you would have made 441 $20 investments amounting to $8,820 invested in total, and the market value of these small investments would be about $3.2 million today. Wow, all it took was a little less than $9,000 to turn you into a millionaire 3 times over. And of course, about 37 years of time. The time factor is actually the most important part here, aside from picking the right stock, but I'll dig more into that a little bit later. United Healthcare didn't actually start out as a dividend-paying stock. Matter of fact, they paid their first dividend in August of 1990, about 6 years after the company went public. And for the vast majority of its history, UNH paid only one annual dividend. It wasn't until early 2010 that the company switched to a quarterly dividend payment, and really started growing this dividend stream. Going back to my $20 a month example, this investment in UNH would have generated $194,760 of dividend income since 1985. That's not a bad chunk of change to earn along with a $3.2 million portfolio value. $194,760 is 22 times more than you would have invested into UNH stock during these almost 37 years. Now, if you are a patient and disciplined dividend investor, you may have reinvested this dividend stream back into UNH stock instead of spending it elsewhere. Had you done so, the market value of your UNH investment would be worth an additional almost $639,000. That's right, you would have 16.59% more wealth by simply opting to reinvest your dividends back into more shares of UNH stock. And these additional shares would have produced 11.78% more dividend income for you, which equates to about $26,000 in additional dividends. If we use the last quarterly dividend payment rate for United Healthcare, we can estimate that this UNH investment would generate almost $48,000 of dividend income per year today, assuming the dividend rate remains unchanged. But I have a feeling the company will continue to increase its dividend rate each year in the future. So you would receive 5.43 times your total investment in UNH every year now in the form of passive dividend income. If this isn't one of the best representations that dividend growth investing can be amazing, I don't know what is. Okay, so now we know that investing $20 into United Healthcare per month since 1985 would give us $3.2 to $3.85 million, depending on whether we chose to reinvest dividends. Let's see how little it took to turn you into a millionaire during the same period of time. If you guessed $6.23 per month to become a millionaire without dividend reinvestment, you would be correct. And an even lower $5.20 per month had you opted to drip that dividend stream. I don't know about you, but I have $6 to spare each month. Maybe if you aren't investing in dividend growth stocks already, today might be a good time to start. I know we are talking about the past here, and we can't go back in time to invest in United Healthcare in 1985, but there are plenty of great quality dividend growth stocks out there today. And even if they don't have the same growth story as UNH had during the last 37 years, it's highly likely that your money will grow during the next 20 to 30 years. If you have a long enough time horizon, a lot of patience, and the dedication to stay the course, I think you'll do quite well. If you're enjoying the video, please click that like button. It'll really help out my channel. And if you would like to see more content like this, make sure to subscribe and click that notification bell. Earlier I mentioned that time was the biggest factor in the equation here. And it really is, but instead of telling you, let me show you what role time can play on building wealth. What if we cut the time period in about half? Let's say now we made our first investment in January of 2000 instead of 1985. And you may be thinking, what if UNH stock had much higher growth in the 80s and 90s compared to the 2000s? And perhaps it did have a slightly better growth rate. There were a few years of more than 100% annual returns in the 90s. But since 1990, UNH stock has a 26.83% compounded annual growth rate. During the last 5 years, the compounded annual growth rate was 28.58%, and 27.33% during the last 10 years. So as you can see, the stock for the most part has kept up pace more recently with its long-term returns. Had you started investing monthly into UNH stock in January of 2020, you would need to invest about $1,054 each month to duplicate the results of starting in 1985 with $20 per month. That is a drastic, almost 53 times higher necessary monthly contribution. But maybe you'd be content with just $1 million portfolio, in which case you would need to invest $329 per month into UNH since January of 2020 without dividend reinvestment, and about $279 each month if you chose to reinvest a dividend stream. While these monthly contributions are significantly higher than $20, they aren't unattainable. $329 per month is about $75 per week. Everyone's budget is different, but there are ways to free up this amount each week if we really try. So if your time horizon is shorter than 37 years, which I presume for many of you might be the case, don't let that stop you from giving dividend growth investing a try. Perhaps dividend growth stocks like UNH may not be the best option for you today, but if you have 10 or more years, why not take a flyer on a high growth dividend stock to spice up your portfolio value? If you have listened to my channel in the past, you may be familiar with me doing similar analysis on Home Depot and Lowe's in the past. All three examples were constrained to the same time period and the same monthly investment amount. United Healthcare thus far takes the cake, offering almost 2.5 times the return of Home Depot and more than 4 times the return of Lowe's. I think all three of these dividend growth stocks are excellent examples showing that dividend growth investing can lead to fantastic results. I personally own shares of all three of these companies, and they continually keep popping up on my monthly high growth dividend watch list, because to me they are still excellent investments today. I hope you enjoyed the content. Thank you for watching, don't forget to subscribe, and see you next time.